In the last 2 weeks, 3 of the biggest names in tech and finance have all said the same word out loud. A word they usually avoid, like the plague: bubble. And if you've put money into AI stocks, if you're building a startup on top of someone else's AI, or if you just assumed this technology is too big to fail, what I'm about to show you is going to change how you see the next 12 months. Because the cracks aren't coming. They're already here. Here's the thing nobody wants to admit. The AI boom isn't just a tech story anymore. It's a financial story. Trillions of dollars in market value, entire retirement funds, entire national economies are now quietly betting that AI spending will keep going up forever. But spending that never stops going up. Always stops eventually. The only question is how. So today, I'm breaking down exactly what's cracking under the surface of the AI boom, why some of the smartest people in finance are quietly hedging their bets. And stick around for this. The one scenario almost nobody is talking about that could decide who wins and who gets wiped out. Let's get into it. First, let's define our terms. Because bubble gets thrown around so much, it's lost its meaning. A financial bubble isn't just prices went up a lot. Plenty of things go up because they're genuinely valuable. A bubble is specifically when the price of something detaches from what it can realistically earn. And the only reason it keeps climbing is because everyone believes someone else will pay even more for it later. Sound familiar? It should. We saw this exact pattern in 1999 and 2000, right before the dot-com crash. Back then, the internet was real. It was going to change everything, and it did. But that didn't stop hundreds of companies with no real revenue from reaching valuations in the billions, purely on the promise of what the internet might become. When reality caught up with the hype, trillions of dollars evaporated in about 18 months. Here's the uncomfortable parallel. AI today is a lot like the internet in 1999. The technology is real. The long-term impact is probably even bigger than we can imagine. But that doesn't mean every dollar being poured into it right now is priced correctly. And when you actually look at how the money is moving, the warning signs start piling up fast. Here's warning sign number 1, and it's the one that should worry you the most. Circular financing. In a healthy market, Company A sells a product to Company B, and Company B pays with its own money. Simple. But look closely at some of the biggest AI deals happening right now, and you'll find something stranger. The company supplying the AI chips is also investing in the company buying the chips, who then uses that same money to buy more chips from the original company. Round and round it goes. On paper, this makes everyone's revenue numbers look incredible. Chip orders are booming. Cloud contracts are booming. Stock prices go up. But strip away the paperwork, and a huge chunk of that growth isn't coming from new customers actually using AI and paying for it. It's the same handful of giant companies trading money back and forth between each other. That's not new demand. That's a closed loop. And closed loops don't grow the economy. They just make the numbers look like they are, right up until someone stops passing the money around. Warning sign number 2, how all of this is actually being paid for. Building the data centers that power AI isn't cheap. We're talking about facilities that cost tens of billions of dollars each, guzzling as much electricity as a mid-sized city. For years, the biggest tech companies paid for this out of their own massive cash reserves. That felt safe. But that's changing. Increasingly, this build-out is being financed with debt, bonds, loans, complex financing structures that didn't exist in the AI conversation just 2 years ago. Debt itself isn't evil. Companies borrow money all the time. But debt only works if the thing you built with it makes enough money to pay it back, plus interest. And right now, a huge percentage of AI data center capacity is being built on a bet that businesses everywhere will eventually pay enough for AI tools to justify hundreds of billions in infrastructure that's sitting there, right now, waiting to be used. If that demand shows up on schedule, fine. Bet pays off. But if it's even a year or two late, and infrastructure builds are famous for running late, you've got trillions of dollars in debt-funded concrete and silicon, generating a fraction of the revenue it needs to break even. That's not a hypothetical. That's the exact mechanism that turned the 2008 housing bubble into a financial crisis, an asset that everyone knew would keep appreciating, built on debt that assumed it always would. And here's warning sign number 3, maybe the most telling one. Watch what insiders actually do, not what they say in interviews. Even some of the people at the center of the AI industry, including voices from inside the companies leading this boom, have publicly acknowledged that the market is showing bubble-like behavior. That's not some outside critic. That's coming from people with a front-row seat to their own hype. At the same time, several well-known investors who made their names calling previous bubbles before they popped have been quietly placing bets that AI-linked stocks are overvalued. You don't do that if you think the party's just getting started. None of this means AI is fake, or worthless, or going away. It means the pricing of AI, how much money the market thinks it's worth right now, today, might be running way ahead of what the technology can actually deliver in the short term. Now, to be fair, and I want to be fair here, there's a real argument for why this time could genuinely be different. Unlike a lot of dot-com companies that had no revenue at all, the companies leading the AI boom right now are some of the most profitable businesses in human history. They're not burning venture capital on hope. They're funding this build-out with real, enormous cash flow from real, existing businesses. There's also a case that AI adoption is still in its early innings, that today's spending looks excessive only because we're underestimating how much every single industry, from healthcare to manufacturing to logistics, will eventually run on this technology. So which story is right? Honestly, probably some of both. Some of this infrastructure will look like genius foresight in 5 years. Some of it will look like the fiber optic cable companies late in 2000 that sat unused for a decade. The hard part is that from where we're standing right now, in the middle of it, it's almost impossible to tell which is which. So what do you actually do with all of this? If you're investing, this isn't a signal to panic and run. It's a signal to know exactly why you own what you own. Are you holding a company with real, diversified revenue that happens to use AI? Or are you holding a bet on AI spending going up forever, with no plan B if it slows down? If you're building a product on top of AI, this is your warning to build something that survives even if the cost of AI compute goes up or a key provider stumbles. Don't build your entire business on the assumption that today's prices and today's players are permanent. And if you're just watching from the outside, this is your reminder that the loudest hype and the underlying truth are almost never the exact same thing. That's true in every boom in history. It's true here too. So, is the AI bubble popping right now in real time? Or are we just watching the market take a breath before the next leg up? I genuinely don't think anyone knows for certain. And honestly, anyone who tells you they're 100% sure is selling you something. But now you know exactly what to watch for. Keep an eye on those circular deals. Keep an eye on the debt. And keep an eye on what the insiders are quietly doing with their own money. Drop your take in the comments. Bubble or built to last? And if this kind of breakdown is useful to you, subscribe, because we track this stuff before it hits the mainstream headlines. I'll see you in the next one.